From Jamie Dimon to Elon Musk, business heavyweights have a lot to say on the state of the economy, and investors may want to listen up. Yahoo Finance's executive editor, Brian Sozzi, joins us now. This is sponsored by TC Trade. Sozzi, you wrote about it in the morning brief this morning on Yahoo Finance. Some stark warnings that we're already hearing this earnings season from executives.
And these warnings, Shauna and Brad, are starting to pick up. When I hear Elon Musk hop on an earnings call and I think just say, hey, market goers, we need to be more concerned about higher interest rates. Why? Because I'm seeing it real time in my business. People may not be willing to spend $700, $800, $900, or in some cases $1,500 a month at these higher rates to own a Tesla vehicle. This comes on the heels of course, Jamie Dimon saying this is one of the most dangerous times he is seeing in the world. I talked to American Express CEO Stephen Squeri after earnings on Friday. Optimistic as always for Stephen, but I think did voice a little concern about in the state of the consumer. You put all these things together and you're starting to, I think, better understand why you're seeing this nervousness in the markets. There is more going under here, underneath the surface. They're just saying yields are near 5%, stocks are going to sell off. Consumers are slowing down a little bit, and this all comes before the holiday shopping season picks off. There are more concerns underneath the hood.
We've seen a lot of relief rallies in certain pockets of the market over the course of the year, especially if companies are successful at perhaps couching some expectations. Is that what's at play once again, or is this something that's far different calculus for CEOs? There are, I think, just deep structural changes is happening in the market right now. When you see yields go to these levels, you have interest rates, let's say on a 72-month to finance a car approaching 9%. You have more 30-year mortgage rates near highs people haven't seen in a decade plus. These are real challenging things that consumers, average households, are going to have to deal with, and they're dealing with in real time. And then, oh yeah, you still have inflation. I know we look at all these inflation readings coming in. We have inflation still at very high levels. Put this together, and I think you just have a market that has been unwilling to price some of these risks in. And I think that's what you're seeing right now, real-time adjustments by Mr. Market trying to figure out what are all these concerns, what do all these headwinds mean for consumers, then by extension, what does it mean for corporate earnings in 2024?
And when you talk about corporate earnings, big tech is going to be in focus this week, right? We've already seen a look at a number of the larger banks. We got a good look at some of the consumer staple plays last week. But when it comes to big tech, Saz, how much do you think is riding on the results that we're going to be getting out over the next several weeks, given the fact that obviously they were the huge driver in the markets for at least the first 6-7 months of the year?
Everything. These are the biggest companies in the world in terms of market cap. So if Apple comes up here and warns that it is in fact seeing a China slowdown, which we have been hearing increasingly about in the recent weeks, that's a concern. Google doesn't meet its guidance because of higher costs and higher interest rates to fund its various lines of business. That's a concern. Microsoft, that is the one name, I think, out of all the tech earnings that we're going to hear from this week. That could be the upside surprise based on people that I've been talking to. A lot of momentum behind AI, various AI initiatives, momentum behind Office. And then I think you are looking at what does a re-rated Microsoft look like in the world where it now owns Activision Blizzard. And I think the street, just looking at the earnings estimates for Microsoft, has not properly adjusted for that. I would expect those estimates on Microsoft to go way up and way up very soon.
You know, it'll be interesting too, especially from the tech perspective, because there's been such an acquire to grow or consideration of, all right, how do we build this out internally? And the acquisition or the investment strategy into AI so that they're not missing that wave, that has been prominent. That's been the headline over the course of this year. So you got to wonder, in a yield environment like this, where even some of those smaller companies might be harder to get, it might be harder for them to get capital, and that access to capital becomes more difficult, do they eventually announce or have to move towards some type of acquisition or sale to some of these larger companies too?
Well, I'm going to ask all these questions, as are you, at the Yahoo Finance Invest Conference at November 7th, New York City, Moonlight Studios. In terms of AI, I'm actually very excited. Alexander Garfinkel speaking to Runway's co-founder and CEO. That is going to be an interesting conversation. Also, you have companies that are outside of that. We're talking to a lot of media CEOs. I believe you're speaking to Jeff Zucker.
Yeah.
You know, media, you look at Paramount shares, really are trading at 52-week lows. That is a company right on the cusp of just seeing, I think, more troubles because of the higher cost of debt, a lot of debt positions. But again, we'll get into all those topics. Yahoo Finance Invest, New York City, November 7th. So jazzed up, really, really, really excited. You guys are both on stage with some very big people, just very big.
Be a lot of fun.
Yeah.
Very informative for our audience too, obviously.
Exciting.
Big names.
Saz, thanks for joining us in studio today.
Yahoo Finance Invest, November 7th. So excited.
What day?
Yep, November 7th.
Awesome.
All day, every day.
We'll see you there.